This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:07 p.m. on the 11th of August 2019, Sunday evening. Globex futures have started trading. They are pretty much flat at this moment, and we are awaiting the big number that comes out every single evening nowadays at 9:15 p.m. Eastern Standard Time, New York time, and the numbers are published by the People's Bank of China on the currency fix known as the Yuan fix. That is the exchange rate between the Chinese renminbi, their currency, or the yuan, and the US dollar. Keep in mind, as per our previous webinars, which I went in excruciating detail to explain that a stronger yuan versus the US dollar, in other words, if the yuan is, let's say, well, let's put it this way, this is where it gets confusing. We would like to see the Chinese yuan weaken, a Chinese yuan get a little bit stronger against the US dollar. Okay. In the meantime, what China has been doing in its own way, and President Trump has accused China as a manipulator, currency manipulator to a certain degree, that's correct, is that they are weakening their yuan in an artificial way to make their exports more competitive. As I explained before, and I want to go through that again, is that a weaker yuan or Chinese currency makes their exports more competitive and cheaper, and that relieves some of the burden they're carrying on the tariffs that have been put on Chinese goods. It's really as simple as that. So what we would like to see is basically a Chinese yuan which is below 7 versus the US dollar, and that would be considered to be a positive market catalyst. A Chinese yuan set by the PBOC, or the People's Bank of China, which is above 7, which means that they are basically weakening their currency. In other words, the yuan's getting stronger, but it's weakening against the US dollar because it's inversely proportional. It's opposite. Okay, so I just want to make that clear. So we should be getting that in the next 6 minutes. In the meantime, let me just read out the standard stuff. Full disclosure, this is purely for financial education, not for any solicitation or advice. You're seeing behind you live E-mini futures, which are roughly down about $1.50 right now. This is a 1-hour chart of the futures. You can see that, the structure. And let me just zoom it into the 15-minute or maybe the 5-minute, so you can see the movements a little bit more clearly. There we are. There we are. This goes back to Friday, so I'm going to basically zoom into from Friday 12 midnight till Friday 9:30 when the market started trading. 9:30 right here, and this is where we are right now. Okay, so now you can see the structure a little bit more clearer, the technical structure. Quick but important reminder to everyone who's going to be listening to this down the road, hopefully sooner than later, and for anyone out there with internet connection, these sessions, these strategic sessions, are extremely resourceful, extremely powerful, and extremely accurate. If you compare these to previous broadcasts that we have done in past Sundays and Wednesdays, we do it 2 times a week, at least for the summer. We'll probably move it to 3 times a week during the winter, who knows, or during the fall. You will see that the progression of the forecasts have been extremely correct. It doesn't matter what I say; it's what I have said, and you compare it to versus what has happened. That is the true testimony of the power of tactical forecasts done here at Clueless Trading. So please feel free to do that. We also have a terrific Instagram account where we put out some highlights of some fantastic options trades. So please do follow it, hit the like. Let's get the follower count going. We are approaching 560 followers or so, which is pretty good for a layman's Instagram account, which is primarily to get the word out that Clueless Trading does exist, that we are a very powerful exclusive service when it comes to the technical aspects of the market, and we tend to trade the markets quite successfully through all types of environments, bullish, bearish, and sideways. So please spread the word for us. It would be really helpful. On that note, a couple of things here. We are coming into a week which is normally a turbulent week. Not that we didn't see turbulent last week. You can clearly see here that the month of August itself well, since June 30th, look what the markets have done. The huge plummet, and then the move up. This is the reflex bounce that I've talked about extensively, that many of you have taken advantage of. It takes discipline. Nothing goes up in a straight line or up or down. We all know that by now, and you can clearly see that. You see the general direction at this point is the primary trend on a short-term basis is higher, correct? And the primary the primary trend since June 30th was some multiple flash crashes during the day, and that primary trend has been reversed, and the reflex bounce right now is higher. So we do have to take that into account when we are managing our trades and maintaining our positions, and hopefully not panicking or doing any silly stuff, which we all tend to do. It doesn't matter, who we are. Some of us tend to do it a little less than others, but we all tend to leave large trades and sell too early. We all know that. And we also tend to basically not get in sometimes at the most critical moments, which would be times like this, around the 4th, 5th, and 6th of August, and then miss this enormous, ginormous, for a better choice of words, type of moves that the market gets, right? So saying all that, you're seeing the live futures here, and we will keep this on the background as I cover a couple of things. So this week we are coming into monthly options expiration. So if we look at the date calendar, monthly options expiration is the 3rd Friday of each month. This is not weekly, this is the monthly options expiration, which is Friday the 16th of August. Keep in mind that at least for a couple of days, going towards the monthly options expiration, we tend to get a very powerful move on the market. This is for a technical reason. They are normally biased higher. Okay, they're biased higher. Now, as I've said, and as you know, you guys know very well, not I'm kind of reiterating the obvious, is the fact that it doesn't just go up in a straight line. There's a lot of zigzags, lots of different patterns, inverse head and shoulders, ascending triangles, Fibonacci retracement to the 50% level, all these things that I post on a regular, consistent basis to guide my traders and members and help them make money and all types of in turbulent markets. So it's never a straight line. So we will see the same type of situation happen. And I believe that sometime I'm not quite sure, maybe the early part of this week, we're going to reach pattern completion number 2. Pattern completion number 1 was reached on Thursday at the close. You can see that right there. This was projected all the way from down here. And that was at 4 o'clock at the close of the market on the 8th, which was Thursday. Then we had Friday. We were in a consolidation channel. This was before the market on Friday. This is the market opening on Friday. And we basically plummeted, I believe 250 points or so. We retested exactly the Fibonacci 50% retracement. And I know many of you are finally getting tuned into the technical aspects of the market, and it still amazes me, so I'm sure it amazes many of you, how accurate these lines are. Because the markets are really run, as I keep on repeating, and will keep on repeating, that are run by algorithmic high-frequency trading machines. And as long as we can structure our charts to a high degree of accuracy, that is what's going to happen. That is what we call the tactical crystal ball. And I know many of you are starting to respect that. Many of you are looking at the charts and managing your trades accordingly and not panicking just because we are down 250 points. Keep in mind, this is just one of the 4 different types of 4 different platforms that I use to produce my extremely precise tactical trading charts, both swing and day trading charts. And this is just one of them. And this is through investing.com, which all of you can replicate. Okay, China has set the Yuan reference rate right now at 7.021. This is considered to be, in my opinion, reasonably positive. I hope I don't eat my own words. So the Yuan, which I'm going to put as Y, not yen, but Yuan, and it's also known as the renminbi, that's the currency, has now been set by the People's Bank of China at 9:15 p.m. against the US dollar, against $1, we can basically buy 7.02 renminbi or yuan, Chinese currency. This is set against a basket of different factors that the Chinese government looks at. This is, in my opinion, from what I have seen, this will be considered to be somewhat positive. Nothing great. We would love to have seen it, them set it below 7 or maybe at 7, but they have set it right now at 7.02. So that's not any dramatic weakening of the currency versus the US dollar. Keep in mind that weakening of Chinese currency means that this number, the 7 number, would be going a lot higher. For $1, you'd be buying a heck of a lot more of the Chinese currency, the yuan or the renminbi. So I hope that's clear. So this is considered to be, I think, overall futures are up about a point right now. NASDAQ futures have jumped up about 3.5 or about 4. And Dow futures right now are up about 2. I'd consider it to be, from a structural technical standpoint, that's really what we do here, somewhat of a good to go. No major alarm. Let's see as we proceed, because the markets are now reacting to it, the Globex markets. So looking at this chart here, pattern completion number 1 was here, that was finished, that was done on Thursday. We had a consolidation channel which hit exactly as I had drawn it, based on the 50 fib, based on this parallel. This is basically a inverse head and shoulder, big one and small ones, and then a consolidation channel. One can also draw it as a cup and handle. One can also draw it as a cup and handle, and this is your handle. If we broke below the 50, and you can notice that this is an uptrend line right there with 2 points of major contact. If we broke below that, then obviously the market would hit the next support level, which would be 28.72 or thereabouts, right there. These things are extremely important to all of us, not because they're numbers, but because they are structural support and resistance levels which help us manage our profits and give us a clear indication, in most cases, when to buy and when not to panic. I didn't say when to panic. I said when not to panic, because panic as a trader or as an investor in any type of market is a very dangerous game, because once you panic, you tend not to get back into it when you like, this was a full-scale panic in the market. So what happens is, from a psychological standpoint, you sell, you're so scared, you don't get in, and you miss this entire 500, 600, 700,000 point type of run. Okay, so keep that psychological aspect on the back of your head, is that panic is never a good trading strategy, both on the downside, and too much euphoria or excitement or go to the moon, that type of stuff, is also a reverse panic. That's reverse euphoria. Don't want to be in that. You need to be calm, need to be disciplined, and you don't need to be happy all the time. That's life. The biggest things that happen in life when we really work towards it and we're not happy about it till we get there. Then we feel pretty good about it. Then you dampen your happiness and your excitement and you move forward. Same thing in trading, guys. Same thing in trading. Don't get too overexcited. Don't get over panicked, and you're going to be okay. Always be a little stressed, because that's part of the game. Your adrenaline has to keep on going, and you just have to move on. So saying all that, this is where we are. So you can, like I said, this is you can look at it as a cup and handle. You can look at it as an inverse head and shoulder, all kinds of stuff, lots of volatility along the way. And so far, we're in a consolidation channel. We need to hold this level. You can clearly see that. And we could very well dip into that first thing tomorrow morning, for all I know. If we slip below that, you can rest assured you don't need to panic again. You watch to see if we can hold the 27.72. Each of these moves are roughly about 20 points, 20 to 25 handles, which means it's roughly about 100 to 150 points on the Dow. So staying calm can pay a lot of bills. If we break this, or even if we break this, you can on your own put out a short, an intraday short, or a Wednesday type of put, or an intraday short on the SPYs. All right, and capitalize on it. You don't always have to wait for me, because my style is different. And I'm not trying to have you guys replicate exactly my style. I'm just giving you some very useful tools. So sometimes I don't short because I know this is going to be too fast, too quick. And even for fast traders like us, I'm not going to be able to react. So for a few bucks, I'm not going to maybe short. I'm going to wait to buy as long as the primary trend is higher. The primary trend on this level is higher as long as the market stays above 2,900 or above 2,870. Because these are critical levels. So I leave it up to you guys. And I've always told people, and I'd like to remind everybody, that act on your own sometimes. Act on your own. That teaches you independence. You know, the tricycle, the third wheel is out. You can ride on two wheels. So that's it. So this is where we are. Pattern completion number 1, going back to it, is done. Pattern completion number 2, where I think we're going to hit a major, it's my opinion, roadblock at or about 2960 on the E-minis. You can clearly see that. That's where the big sell program, the inverted hammer, everything started back on the 2nd of August. It's only logical to assume that there's going to be some big sell programs waiting there for a simple reason. A lot of people got flat-footed, caught there on this move. And of course, you are going to see them take part of their money out, saying, oh my God, I'm even now, so let me just get out of Dodge, we'll see what happens. That's what we call resistance. So this is a major resistance, pattern completion number 2. This is pattern completion minor 1, pattern completion 2. This is pattern completion 3. Sorry, not 2. It's 3. This is the big one, right? So from here to here, if this follows the classic example of a bull flag, as it is right now, then we should expect to see a breakout very quickly. These things happen very quick. Hit pattern completion number 2, which was Thursday's close, which is 2943. That's 20 points, 22 points from here. That means the Dow will be up roughly 100 plus points. And right there, you're going to get the first sell program. Standard procedure. If we don't, the shorts are going to panic, and we are going to basically make a sharp move up towards 2960. That's another 20 points or so handle on the E-minis and the S&P 500. That's another 100 to 150 points. At which case, long positions, overall long positions, which tend to move with the market, have to be reduced or eliminated, profits taken, all kinds of stuff. This is the only way one can trade these markets, period. There's going to be a lot of volatility. We know what the volatility catalysts are. We have the TT, call it the Trump tweets. We have CC, which is Chinese comments from that other end of the world. We have FC, which is Federal Reserve comments from Federal Reserve governors. And then we have other minor factors coming out of it, such as the Brexit news and things like that, because there's a lot of stuff going on in the UK, which is kind of pushed back in the background for now, but still. We have Europe. European news would be Brexit. The Italian government is looking to call elections. The coalition government is now, I believe, has been dissolved. So they're calling for elections. So Italy is a major power in Europe. And Italy was under pressure big time the last 2 or 3 days. Mario Salvini, I think the 5-party alliance, those guys are now calling for new elections. So Europe and Italy will be in focus. What is the other thing that dominates the markets in a big way? Not overall markets, because it is stock selective, and that is earnings. And that's really what we want to focus on. Of course, we're going to keep all these things in mind. Now, I did mention one thing, and I'm sure some of you will remember, that I did say that I expected no inflammatory, hardcore, anti-China tweets coming out of President Donald Trump this weekend. I was right. He didn't. There is a diplomatic game being played out. It's high-level macroeconomic global game theory. And according to my estimation, he wouldn't, because there are some significant talks going on underneath the surface, if you read in between the lines. So even though the general media, all types of financial media, are just going on and on how Trump's China initiative and everything has failed, and he's not going to meet the Chinese delegation is not going to meet the US delegation in September, blah, blah, blah. Consider that to be, as they say in the lingo, fake news. Because there's a lot of constructive stuff, in my opinion, happening under the surface with Secretary Mnuchin, Ambassador Lighthizer, trade representative, Peter Navarro, the hardcore China hawk, was on CNBC on Friday. I don't know if any one of you saw him. Did any one of you catch him like right after the market closed on Friday? Jody?
No.
He was, and Peter Navarro has always been my favorite character. Very smart guy, by the way. Even though I sometimes disagree with some of the stuff, but that's part and parcel of the game. He was great. He actually made a lot of sense. He wasn't inflammatory. He wasn't just going into a school, what do you call it? Fight in the schoolyard with the Chinese and all that stuff, whatever, I didn't exact term. He was very moderate, and he was good. And they tried to pin him down on different questions. Reporters do that. That's fine. That is a great interview, and he was good. And I said, you know what? This is good, because Peter Navarro is the hawk in the team. He's a hardcore guy. Like, slam him down. Let's get him to do this and that. And Mnuchin and Lighthizer are the more moderate and more pragmatic part of the thing. Peter Navarro is more of the ideological part of the picture. So he was good. I said, okay, this is nice. So just keep that in mind. So that's a broader macro picture on what's going on. So if my theory works out, which so far it has been working out overall terrific, then we are going to basically break out of this consolidation channel, hit this, zigzag around here a little bit, maybe pull back a little bit, retest this downtrend line, which is the upper end of this consolidation channel, and then bust a move towards here. This is the level that I'm looking for. And if we bust a move over here on sharp volume and a large candle like this, like these type of candles, right? Big green candles, then obviously there's going to be an overshoot, and that overshoot is going to bring us into the 2974 level, which is a monster downtrend line, ladies and gentlemen, a monster downtrend line. And that's another roughly 15 points from pattern completion number 3, right? And that's what's 15 points. That's another roughly 100 points on the Dow. So we are basically going to move between 100 to 150 points on the Dow if this scenario works out, and the same story if this scenario goes the other way. So I think the more you think about it, you should be well prepared. I'm well prepared mentally. The only thing that keeps me well prepared mentally are these tactical charts. First thing, I look at them in the morning. First thing, I look at them in the morning, and my brain registers what's going on. Doesn't matter if futures are opening down 30. Doesn't matter if futures are opening down 30, up 30. This is what keeps me grounded. This is what keeps me moving along this path of a professional quantitative chart trader. So I hope many of you try to apply the same principles and your own skill sets. So this is it. And that's pretty much it, what's going to happen this week. Given that it's a monthly options expiration, the 16th, we should be able to get a burst towards these levels, maybe to this level. But remember, you want to close out all weekly positions sometime by Thursday or Friday morning. Leave a little bit out there, because waiting till Thursday, Friday afternoon is not going to do it. They expire. This is all technical stuff. They expire all the option premiums and all that stuff by late Thursday and Friday morning. So these are the logistics of options trading. Any questions on that? Mike, Trina?
No.
Okay, sounds good. Pretty clear, right, on that?
Yes.
So far, I'm liking the structure, and I'm sure you guys can see that very clearly. Any questions on the technical structure of the market as we move along? Futures are right now up 5. My theory was so far, don't want to eat my own words. Correct that the Yuan fix at 7.02 is considered to be somewhat of a positive catalyst for the market. Keep in mind that China doesn't want to devalue their Yuan. They can, to a degree where their currency is so cheap. What's going to happen to the billionaire Chinese and even the average Chinese? They're going to be like, screw that. Excuse my French. My currency is going to hell in a handbasket. Let me just move into another currency. What currency? What's the king currency of the world? And will be for a very long time, in my opinion. As long as we do the right things, we will remain the top. The US dollar, then the British pound, then the euro. You can go to the ends of the world and anybody from you will transact with you for a US dollar. Never forget that. Never forget that. It doesn't matter if they ideologically like us or not like us. It doesn't matter. The US dollar is king. It is. Okay. So this chart is very clear. Focus on this. And in fact, it's the only friggin' chart that you'll need for this week. Let's look at the next one, which would be a slightly longer term picture, intermediate term picture, which would be the hourly chart. The hourly chart is pretty exciting. It's pretty exciting. This is cutting out the noise of the 15-minute volatility, which make all of us jump around sometimes like monkeys on a hot tin roof. And this is a clear picture of what the swing picture is looking like. Okay, so here was a band we were traveling in till we dropped below that back on the 31st of August, just a couple of days ago, right? Then we tried to read back in. This is the level I'm talking about. The highs on the market where I said we would go, we did go there. Then basically the 29.90 level. So we tried to re-enter that, we missed it, and quick collapse happened for a couple of days, and this is where we are. So if you look at the hourly chart, and I'm going to give, who's on a desktop right now? Jody, are you on a desktop?
No, I'm not.
Okay, Trina, are you on a desktop? Do you have access to a mouse? Who has
Yes.
access to it? You do, right? Okay.
Yep.
So I'm going to give you, I'm going to give both of you access. Now you can move the mouse around my screen. All right, so now you can find my hidden Swiss bank accounts and my hidden contracts. 1 second, let me just pull this up. And my business dealings with Donald. You'll find everything out. Just don't poke around the wrong places because we know where to find you. Just kidding. So I'm going to basically, if you look at this, and you can move the mouse around the screen. So I'm going to ask Trina this. When you look at the internal, point the mouse down to where the stochastics are. Perfect. You can clearly see where the stochastics are moving to, correct? So there is one line that you need to draw. The pattern completion number 2, which is the big blue line, not the big one, but the second big one is where? Correct. Perfect. So Trina, so that's where we'd like to go. And that's where we'd be like, okay, let's take a breather, big breather. In the meantime, there is one other level, and just focus on it because I didn't make it like the line's very thick on that. There is a downtrend line, which is on the way there, like they say, that there's obstacles. So where is that downtrend line before we reach that 2960 level? No, that's way above 2960. So this is the line that we want to get to this week, 2960, 2962. Some below that is a downtrend line. You can see it. Okay, I'll show it to you. This one. There's your downtrend line that was drawn all the way from the top there. And I'm going to make it a little bit thicker there. Okay, so that is, so where's the downtrend line right now? And give me a number on that. when you move the mouse. Hit that downtrend line, Trina. Correct. Keep going right. Keep going right. Slide right. You're going left. Yep. Keep going right. Yep. So somewhere, I'm going to take over the mouse for a minute. You're going the right direction. Right here. What's the number on the right? Like that number.
2948.
Perfect. So let's call it 2950, just for argument's purpose. So 2950. So let me make a marker on that. So here's your first level of resistance along the way. Now, before that, if we there is another line here, which is basically Thursday's high. Or Thursday's high meaning where the market closed on Thursday. And that is right there. Right there. Don't forget that this dip on Friday was 250 points. It freaked everybody out, like, oh my God, what's going on? But it was really a technical dip, and as we analyzed on the first charts. So consolidation channel, whatever you call it. So at this point, this level here is 2940. So well done, Trina. So you can clearly see here that these two blocks that I put up there for visual effect is where the markets are going to basically hit hit a real roadblock. Now, is it possible that the markets can replicate this move, this drop down, in other words, bust a move all the way up here and hit 3,000 again? Well, it remains to be seen. One quick tweet, one quick blurb out from China, like, yes, we did set a date for first week of September. They're going to be there or they're coming here. The markets will jump up 300 points in a heartbeat. So keep that in mind. Now, whether or not we're going to get back to a 3,000, I have no idea. All I know is on a short-term basis, this is what we're looking at, and that's a pretty decent number from 2925 to 2926 is roughly about 200 to 250 points on the Dow Jones Industrial Average. Perfect. And by that time, if you look at the internals, you don't have to be really complicated about this. By that time, if you look at the internals will be, well, by the time the market reaches, if we're up 200 points, we're going to be like well into this level. My first thing is what, as Trina correctly identified, the downtrend line right here at 2943. That's where we're going to hit overbought conditions on the hourly chart before it starts to reset again. Any questions on this chart? So we know pretty much where we can go.
Yes.
Okay.
No question.
Now what's going to propagate this type of stuff? Well, we have a couple of big earnings, which are Dow movers, which are going to drag the S&P higher. So let's try to incorporate that into this technical conversation we're having. First of all, we are Monday. There's no significant ones, but let's go into Tuesday. So Tuesday we have advanced auto parts, very important. Large car, a lot of production in Mexico, lots of business with Asia and Europe. So very, very important. That's before the open at AAP. We have played that before. We'll play it again. Then we have a slew of Chinese companies, which will measure the health of the Chinese retail consumer and their overall domestic service industry. Name one that is directly related to the retail industry in China. Any of you?
Baba.
There you go. So Alibaba, it sounds like the way you say Baba, is the one that's coming up before Alibaba. There's another one. Trina knows the name. We have played it before. Similar to Baba, Chinese retail giant. JD.com.
Yeah.
Okay, exactly. JD.com's Tuesday. Calls are very cheap. Let's play it. Let's buy a bunch of them because the bottom line is they're not overpriced. So we'll take a look at it and then, move from there. So JD.com's Tuesday. Then we have Chinese companies like Bilibili. That's another one, which also moves nicely. Now, these are not $15, $10 movers, but $2, $3 on those cheap calls. Make some decent money. Don't have to go nuts on it. Then we have Huya, H-U-Y-A, which is, if I remember correctly, known as the Netflix of China, H-U-Y-A. Then we have YY. That's a major internet company, all on Tuesday after the close. Then we get into Wednesday. Wednesday, we have, looking through the list here. Wednesday, we have Lucking Coffee. Now, this is a trade that I have missed. You guys know about Lucking Coffee? LK?
No.
And as I'm talking to you, this is basically China's version of Starbucks, apparently. And they have stores overseas too. And they're growing like wild. Lucking Coffee. LK is the symbol. I'm going to pull up the chart here. Bear with me 1 second. So let's take a look at Lucking. By the way, this is a daily chart while I'm doing this off the overall market. We talked about this in our previous conversations. Buy it when it crosses over. And in 3 days, the market went nuts, right? It is still a crossover. We would like to see the percentage D line, the orange line, start to turn. That's going to really scare the living daylights out of the short. Mcclellan's good. What's the good news here? Trina, take over control. You did such a great job on that. Take over control of the mouse. Go all the way down to the MACD on the E-minis. Where's your mouse? Hold on. Let me change the color of the pen. It's very important interaction thing. So yeah, take over the mouse. Go all the way down to the MACD to the red bars on the right-hand corner.
I'm doing it. It's not moving.
It's not moving? Okay,
Nope.
so how far can you go? It's not moving over Thinkorswim, the
Nope.
mouse?
Correct.
Oh, interesting. So what I was going to show you, which you would have correctly pointed out, is we have a shrinkage of the MACD histograms. And you know that's a very good sign, because once they go positive, the market's going to bust a move, and we covered that at the end of the show, end of the webinar, bust a move over the downtrend line, and we're going to head towards 3,000 real fast, because this is a very good sign that the underlying momentum pressure, the MACD, is starting to decrease, and you're starting to see the histograms, which are really pillars of pressure, of buying and selling pressure. That's the best way to understand the MACD. Okay, move the mouse, see if you can move it. Oh, you can move it. There you go, Trina, you're full control. So you can see here that it is starting to decrease. Now show us a pattern previously when this happened, which is the one that correlates more on the depth of the MACD, the length of the red candles. Yes, and when was that? That was back on. Go up and circle that part where is that big dip.
Here.
Yes, circle that. Okay, good.
Sorry.
And now go straight up on the chart. Straight up. Go vertical. No, go vertical. Straight out. Straight line up. Go all the way. Keep on going. Yep, and
Right.
circle that. Circle that. No, don't overshoot. Circle that. Go lower. Now, what was that? That was the big crash of December 24th. And look what the MACDs were. Now go down to the MACDs, Trina. And draw, and then, like you were doing correctly, you were moving on a 45-degree north angle, and you will see how the histograms went from being negative, kept on getting, the pressure kept on releasing, shorts kept on covering, new buyers came in, and then they all went green, correct?
Correct.
Now each of the bars is 1 day. So it wasn't a 1 day process that they went green. It was more of a 5 to 10 day process, correct?
Yes.
If we go on a 5 to 10 day process, we come into the middle, we come towards the latter part of this month, right? If we use the same pattern symmetry.
Correct. Yep.
Which is a good thing. That means August should end on a brighter note. Now, in between, of course, we know volatility and all that stuff. Now, the other thing was, if you look at them taking this over, so basically we are right here. So we still have maybe 1 or 2 days to go green, just the way it happened here. We are right now, if we want to draw a line, we are here, right? See, this is predictive analytics at its best, and you don't need to be a rocket scientist to figure it out. You just have to be a great chart reader, a good chart reader. So the bottom line is it's shrinking. So if that's the case, then it took 1, 2, 3 days before it get green, and then the market went gangbusters on the upside, right? So if that's the case, do the day count. I said monthly options expiration this week. So this move into the green should happen this week, just based on the number of days it takes for the histogram bars to go green. See how everything correlates? So regardless of intraday back and forth, 50, 60 points, 100 points, this and that, as long as this is continuing, as long as the stochastics are moving, you want to be generally on the long side or buy the tactical dips, as long as this is continuing. And God help us if we start to see, which in my opinion, we will start to see the percentage D line, the orange line start to turn, you're going to see a big move up. Once we get towards this 80 plus level, you obviously want to let go of your positions or at least lighten up. And by that time, what's going to happen to overall prices on the external side? Let's take a look at it. Let's get these lines out just so that we can see it a little bit better. We should be perfect. That's nice. 50-day moving average is at 29.41. We are at 29.25. 50-day moving average is at, the red line is at 29.42. So ladies and gentlemen, that's 18 points from here just to here. That's 18 S&P points or E-mini handles multiplied by roughly 6, the conversion rate to the Dow Jones Industrial Average. So we should have 108 points. It's never exact. Sometimes you have to look at the factor as 7, 6 or 7. And if it's 7, 7 8s are 56, roughly 108 to 126 points on the Dow just to kiss the back end, no pun intended, of the 50-day moving average. And 50-day moving average is always a major resistance, yes? Especially when you break down below it. That becomes the big daddy of resistance. So guys, there's money to be made. You can just trade the SPYs. Or you can buy like a Boeing type of thing that moves with the market. Or you can buy Northrop Grumman, which is a new addition to my trading list, which we made money on, 3 points on it on Friday. And I'm late in the game. Roku and stuff, they don't move with the market. They just move at their own volition. You know that. But general stocks. Or you can buy the DIA. So the best way to play the overall market is the DIA, the Diamond ETF for the Dow Jones Industrial Average, the SPY. On the tech side, you want to play the QQQ or the SMH. The calls are always there for you to have. Now, I didn't forget about the IWM, but the IWM is kind of singing its own tune at this point. These are the ones a lot of the big money's flowing in. Calls are all reasonable, and you can make some really decent profits, 40, 60, 80, 100, 200%, depending on how fast and furious the market moves. Now, the next level of contact, which is, so all this is clear, guys?
Yes.
Yes. Okay. Now, let's keep trading simple. Let's look at these clean ETFs, buy the options on them, buy the ETF, whatever you want to do. Options, obviously, where it pays the bills. There's a big downtrend line here. That downtrend line is around 29.58. I believe that we are going to cross over the 50-day moving average, and we are going to hit 29.70, which is the 34-day moving average. Now, keep in mind that despite this huge onslaught of selling that was propagated from the end of July, 1st of August. And Trina, take over the mouse again. I'm going to have Trina run these shows from now. Okay. Track the 34 and the 50. Just roll them out, roll the cursor over it. And do it from this date when the market broke down. That's the 34. Where's the 50? Wow, you're like an artist. All right, so there we go. Beautiful strokes. Welcome. This is like the game shows, right? So, so what is that telling you? Now go back, slide back to the left, and look for the crossover point with the 34 and the 50 crossed over. The 34 crossed over the 50. Go left. Keep going left, lady. Stop. That was back around the 8th of July, about a month ago. So I'm going to mark that level. This is where a major inflection point happened from a technical standpoint. During that period, as Trina showed us, we have the 34 moving sideways, we have the 50 moving sideways, all this dramatic thing that the world is ending and nothing's ever good going to come out from the United States of America, or our markets all suck, we're going into recession tomorrow. That's all you hear. I'm just so tired of it, and this is not the first time. I've been doing this for a while. It's all you hear from smart people, from just like, what is going on? Okay. What, you just fall into recession like you're walking on the street and you say, okay, boom, I'm just deep in a New York manhole. I'm like, where am I? Oh, I'm in recession. It doesn't work like that. There has to be major signals. And some of these big investment banks, by the way, I'm not going to go against them. They're like, oh, our indicators are all showing major recession stuff. In my opinion, just a humble student of the market, we're pikers in the scheme of big money. They're wrong. And there are a few of the people who are standing up said, yes, there's no recession. What are you talking about? Yes, there's a slowdown because of the trade war friction. No question about it, but no recession. I go with that camp. So saying all that, through all this, the moving average is telling us something. They're not buckling. Do you see the moving averages going like this? No. Now, I know it takes time because it's 34-day smoothed average, and this is a 50-day smoothed average, meaning they add 34 days of prices and 50 days worth of prices and divided by the number of days. So it takes time, but I don't see any major deterioration. Do you guys? Do you guys see this buckling? Yeah.
No.
So that's the first sign. You don't need to listen to some overpaid guy sitting in the Hamptons, telling us that the world's falling apart. Because most of the big money is like sitting on the sidelines while the market's roaring on. So that's the point that I always want to bring across. I'm not overtly optimistic. There was a time when this was happening, and if you listen to my webinars, yes, I was worried that the bull market had broken. Now, they'll say, oh, the bull market is broken. You'll see we'll never get back to the high. I said, okay, that's fine. But we're tactical traders. Let's make money in the middle. So that's the story. This is the daily. So far, this is good. Mcclellan Oscillator, not that important unless extreme circumstances. When it gets this deep, you buy with hands down. This is starting to shrink. We would like this. We would like this to, the MACD, actual MACD, start to turn around, and that'll be nice, right? That'll be nice. That's when you get that crossover. Futures are up about 4.5. Renminbi Yuan fix, as I mentioned earlier on the session, was taken on as a good to go for now. Now, what is the other thing that's happening here for us traders that's extremely important, ladies and gentlemen? This. What is this line? This has certainly turned. This is a short-term moving average, very important to us traders. You should know by now, red is always 50. The orange one is always 34-day moving average. The blue one is always 20-day moving average. What is this one, which is now trending higher? Take a guess. It's the shortest of the moving averages. No one remembers? Okay, the 5-day moving average. 5 trading days in a week. The 5-day moving average, ladies and gentlemen, is trending higher. So if you want to keep your positions close to the vest, you want to see what the market is doing on a short-term basis, track the 5-day moving average on the daily. These 34 and the 50 and all that stuff, these take extra days. This is 5-day moving average. It's telling us it wants to go higher. So markets can vacillate, retest the 5. As long as this is trending higher, then your short-term picture remains higher, i.e. at least this week. Am I clear on that?
Yes.
Good.
Yes.
All right. So you guys forgot what the 5-day was. All right. A lot of people use the 9-day and stuff. I like using the 5-day. It works the better. So let's look at Luckin Coffee. That's what we're supposed to look at. Let's look at Luckin Coffee. Let's talk stocks, guys. Good having you guys here. Which reminds me, did you like Bruno's picture sitting in front of my computers, looking out with his big ears, his Dumbo ears?
Yes.
I know, right? Well, that's the rescue. The guy had major dental stuff. That's why I had to run around take him to the vet like an hour and a half away. But luckily, no extractions, and all good. And he's quite the dog. They're known as papillons. You know, the French word for butterfly because of the butterfly ears. And so he's like big Dumbo ears. Very smart dog. Very smart dog. So, okay. So, Luckin Coffee, my God, that's one heck of a chart. Where the heck were we? I'm such an idiot. How come no one told me about this? I mean, I kind of know the stock, but you know. So I don't know what the option story with this is, but this is a damn good looking chart. This is when the IPO came. The stock ran up to 26. It's now reaching the 27 level, which is the IPO high. The low was 1371. I like the fact that frigging thing's not trading at 40 or 50 bucks, in which case I'd be like, oh my God, this is way too much. It's simply gone back to the upper end of the level. So let's talk stock trading. Your lower end of the level is 22. You got a 4-point move here. From 27 to 22 is 5 points, correct? Yes? The depth of the trading range is 5 points. It could be construed as a cup and handle. A cup and a handle. How appropriate. It's a coffee chain. Big one, right? Growing like wild. Luckin Coffee. So it's a coffee cup and a handle. How about that? Here's your coffee cup and your handle right there. 5 points depth. If it busts a move and the earnings are good and the market takes it like, you know, I'm not going to be an earnings analyst, right? We have given up on that stuff like a long time ago. But if it busts a move, where can the stock go? The depth is 5. High is 27. Quick. You guys should know this. I know Jody knows. Trina knows too. So does Mike. The depth is 5. If we get a breakout over this trading channel or the handle, remember, top end of the handle is 27, lower handle is 22. 5 points here in the middle. If it busts a move, where can it go? What's the number, roughly?
32.
Thank you. 32. Let's do this one. So far, it looks good. Technically speaking, that means big money is in there. So there's Luckin Coffee for you. Coming up on at the open on Wednesday, ladies and gentlemen. Somebody asked me, like, where do you get a lot of information from? I use Benzinga. I use briefing.com a lot. If you're looking to get a real news service, not just for earnings, for a lot of stuff, breaking news and stuff, briefing.com is it. I've been with them for many, many, many years. It's just one of those staples, that's standard expense on doing business. I know the lady there. They're based in Chicago, just like Quad, just the way I know the person there. I'd like to develop relationships when I've been paying them for years and years. Let me know. I'll pass on a good word. Hopefully they'll give you a discount. Actually, they do give a discount to Clueless 8 traders, because 2 years ago, a lot of people signed, whole bunch of people signed up for that. So let me know. Just DM me on Twitter and say, hey, I'm interested in trying out. Well, I don't own roofing.com. I can just forward you the lady's name and stuff. You call them up and say, I'm with Clueless 8 Trading, and they'll give you a break. Just keep that in mind. These things are extremely helpful. That's how you become a real independent trader. So that's Luckin Coffee Wednesday after the open. After the close, we have Wuba. That's 58.com. I believe that's a gaming company, Chinese. I think we have played that one before. Very interesting. And then we have VIP Shop. I'm not a big fan of that. I like JD.com more. That's on after the close. Thursday comes Trader, aka Jody's company, just Jody's company, Alibaba Group, Jack Ma. Alibaba is before the open on Thursday. We gotta play it. Let's take a look at Alibaba's chart, because we haven't really traded Alibaba lately, right? And it's been moving. I mean, I see it up 3, 4. We've been hitting some other home runs, so I haven't really focused on that. It's time to refocus. Alibaba on the daily. It's a very mixed chart, in my opinion. The bulls will say, this is a massive W. And the stock is going back to 180. Or at least, yeah, 180. And the low on the stock is 150. I would say I have no friggin' idea. What I can say is let's take a look at the internals. One of the reasons why I like these companies because the sentiment is overall so negative. China service industry, remember, they got enough people. What's the population of China? Almost 2 billion people? I mean, come on. They got enough people to sell to. They don't, and Alibaba is not that export orientated. So this one is still pointing down. So histograms are starting to shrink. So that's a good sign. But the actual MACDs are still pointing down. So net, it's kind of a neutral picture. This is telling us nothing. The Mcclellan Oscillator. The stochastic, the full stochastics are, in my opinion, overall positive. Would you guys agree?
Yes.
Okay. So I would say that if we play it, just buy a few calls or buy one call. I don't care. Because if this baby moves, it moves. It's going to move big. I'll give you a picture of the number. 7 points. The implied volatility based on from Thinkorswim, the implied volatility, i.e. plus minus, is 7 points. Oh, wow. Just like the Chinese yuan. How prophetic is that? It's pretty funny. It's 7.20. So that means the stock can move to right towards the 50-day moving average or break down towards the level, which is the gap fill, which is 152. I think it's a bet we can take. What do you guys say?
Yes.
You got 7 points here. Remember, there's a gap fill here. See, this is how you measure your probability of risk. Investing and options trading is nothing but quantifiable risk. Write that down somewhere. It's quantifiable risk. You quantify your risk and say, okay, I'm buying a call for 3. If I blow up, I'm going to lose $300. But if this goes, I'm going to make 800. That's the reason why it's so desirable to play some name brand earnings. Quantifiable risk. Now, can it be outside the risk parameters? Sure it can. Sure it can. It can bust a move and go to 170, or it can bust a move and go to 140, lower. But quantifiable risk is what we are measuring right now. So let's zoom in and take a look at that from this level higher. So we are looking at 150 to 152 on the low end, in which case I would be a buyer. Remember, it hit 150, 152 at the bottom of this Cold War with China, this trade war. So I consider that to be a floor. Just the way it was a floor back on June 3rd. So I know what my downside risk is. So even if I bought it here and the stock plummeted down towards 150 or even slipped and slid a little bit lower, I would be adding to it from a dollar cost averaging standpoint. So if I bought one call at 3 and it went down to 60 cents, I'd be adding at the 60 cents. We have seen enough reversals, and I think I've validated my point on these reversal trades many times. So I would dollar cost average cost here. Now, if you want to wait around and say, no, I'm going to buy it at 150 when it comes down, sure you can. But then if the stock pumps a move and hits the 34-day moving average, the 50-day moving average heads towards the 200-day moving average, then you're lost. What you don't make is what you lose. So I'd rather have a small position prior to earnings and then buy, depending on the technical picture, all kinds of pictures, after the earnings. Add to it. And then bang, as it goes, it's going to go. So that's the picture from a daily standpoint. If we look at a 1-hour chart, it really doesn't tell us anything. So Alibaba, ladies and gentlemen, is on Thursday. What else is on Thursday? There is NIO. That's an interesting one. That's China's Tesla, right? We haven't traded that in a while. We did trade it for a while when it first came out, and we did okay with it. So let's take a look at NIO. Hourly chart tells us nothing. The daily chart also, let me clean this out. These are all drawings from way back. Remember, NEO just jumped up right after we bought it, and then we just never really looked at it, right? So we're looking at it again. Internals, quick glance. I'm going to ask you guys. Internals, quick glance. What does it look like? First glance. Okay, not okay. I'm going for first glance. Yeah, the MACD. Is it on a scale of 1 to 3? 1 being terrible and 3 being pretty good. Where does this stand?
2.
Okay. Trina? Because that's how you, as a technical trader, get your mind used to like the first glance, what it tells you. Trina?
2.
Okay. I'd actually give it a 3. Because how deep was this? And look where it is. So I would give it a 3. I know 2 is a safe number, but I'd give it a 3. Just look at that. So that's my opinion. Mike?
Yes.
So you think the overall, a scale of 1 to 3, Mike, what do you think the underlying internals, like, 1 being terrible, 3 being pretty okay? Where do you think this stands?
I don't like the fact that it's MACD is showing negativity.
Okay, but you do admit
I'll
that.
wait for it to break out.
Okay, fine. So that's another opinion. Thank you for sharing that. So the MACD is negative, but the MACD negativity is relatively smaller than the previous time. So that's how I look at it, but I respect your opinion on that. This is terrible. That means it's a great buying opportunity. This was deep down. That's a great buying opportunity overall. This one is, if you notice, it's getting shallower and shallower. So do keep that in mind as you look at it. So thank you for sharing that. Okay. So different opinions, but all good opinions. So let's move on. When you look at the stochastics from a scale of 1 to 3 overall, where does it stand? Starting off with Mike again. From a swing trade.
The stochastics just turned, so that's a positive.
Okay, so you like the overall picture. Do you guys agree with me, Trader
Yes.
and Trina? Okay.
Yes.
We're not like excited, but we're like saying, hey, it's okay. It's crossed over. So that's fine. Remember, this is not Netflix, which moves 15 bucks a day. I mean, this is NEO. It's a $3 stock, for God's sake. So from a standpoint of price, the lowest it ever got to, and this is why this could be a buy. Don't expect to make like, serious money on it unless you buy a lot of shares or so. 1 second. I found this on the web. Siri picked up my thing, and then, because I said serious, so Siri picked it up. So if you look at the overall picture, it's a very shallow move. 235 is the low. The first level could be 4. So the options would be very cheap, but don't expect to see in like a big thing unless you buy a big lot. So I would say that the only way I would draw this, I think it's a good risk-reward ratio. Given the fact that the lowest the stock ever got to in its lifetime is 235. Right here, I would draw a line here. The last time it hit a high, which was on the 10th of July, that's 397 on a percentage basis. If the stock goes to 397, you're talking a pretty significant move. You're talking 84 cents on. So you're talking a 26% move just for the stock moving from here to here, right? For stock moving here to here is a 26% move. So if you want to buy some shares, might be a better bet than buying options. So just passing it on to you. Can the stock bust and move higher? I have no idea. But there's, it could surprise the market in a big way. All of a sudden, it's on the radar of a lot of big boys. Remember one thing about a lot of mutual funds and stuff, they can't own stocks less than 5. Do you know why? Why why can't a lot of big fund managers own stocks less than $5 a share?
No, I don't know why.
Because they can margin it. Any stock which is below 5, I don't think they've changed the rule. They're not marginable. And most fund managers, when they're buying stock, you think they're just buying it with cash? They're buying it with big time leverage and margin, hedge funds included. So when it's below 3, when it's 3, below 5, they can't really own it under the charter. So a stock going above 5, all of a sudden, big volume comes in because all the big boys can buy it. Got it? You understand what I just said, guys?
Yes, yes, I
Yes,
understand.
yes.
Okay, so
Thank you.
keep that in mind. It's like the old-fashioned, buying cheap stock kind of play. So where is the 5? The 5 is at the 200-day. The 150-day moving average. And if it goes to 5, that means the stock's up 60% plus. That's a lot. Who knows? Let's keep an eye on this. So, nice cheap bet. Now, what else is on Thursday? Is a great American institution, Walmart. There goes your Walmart. Lots of lines and stuff from previous Walmart trades that we have done. So what is going on with Walmart? I don't know. Neither does anyone else. All I know is not too bad. Nothing too good either, because this is looking to me as a head, left shoulder, right shoulder. Neckline, it broke below, which was the 50-day moving average. So here is the bet I would put. Walmart's not stupid, all right? I was just at Walmart over the weekend picking up cat litter and stuff because they're the cheapest, all right? So simple stuff that I use in my simple brain. I think Walmart's going to try to kiss the back end of the 50-day moving average. What do you guys say? You don't have to agree with me, but I would say that's a doable trade. And that's 50-day moving average is 110. If the stock moves $3, those options are going to be up at least 50 to 60%. And Walmart options are pretty cheap. What's my downside? My downside is 105. My downside, extreme downside, is 102. If Walmart goes from 107.28, which is the close on Friday, to 102, 103, ladies and gentlemen, the market's going to croak a little bit. It's going to take a bunch of retail down. So I would say you can do a straddle if you want, because the calls are cheap. You can buy from a dollar standpoint, you can buy, let's say, giving you a simple example, it's $100 worth of puts and $300 worth of calls. I would be long biased just because of the fact that there's a lot of negativity. Remember, the background of the market has to be taken into account. The background of the market is super negativity and bearishness everywhere. In the meantime, futures are up almost 7 points right now. We can take a look at that.
You also have to put in as a factor that Walmart had some company-specific tragedy 5 days ago that is probably now winding its way out of the stock.
Yes, that's correct. The shooting. That is very correct. And that type of, and Walmart also did not, from what I read, they didn't say, oh, we're going to ban gun sales and stuff, because it's their prerogative what they want to do. So yes, that's correct. But so that has been factored in. So from a tactical standpoint, I find Walmart to be, again, I'm not a valuation analyst, but I think Walmart's doable. I think it tries to test the 50-day moving average. Maybe it fails there, but I'll take those 3 points. And on those options, that's 40 to 60% of your money. Let's take a quick look at the internals. And this is a big market mover too. It's a Dow stock. Now, the other thing I was going to mention to you, that Walmart has been, over the past 2 years, they know this China trade spat tariff war was going to go. They have been moving their suppliers very nicely to different parts of Asia, which has cheaper labor costs than China, which is something a lot of people don't realize. I don't want to get into that intellectual discussion right now. But China's labor costs, because of their growing, China is probably one nation which has taken the largest amount of people in modern society from like being completely from the rural part, the agricultural part, from the lowest rungs of income into the middle class because of every globalization, because of all the factories and everything stuff. So bottom line is that I believe that, and so the costs have gone up. The labor costs are no longer that cheap. There's a heck of a lot of other countries where you can set up factories, and that's what American companies are doing, and that's why that's what President Donald Trump has been encouraging, for companies to basically outsource out to other countries like Vietnam, Cambodia, Thailand, Bangladesh, all these other places which have huge amounts of labor, modernization of factories and stuff like that, and they don't have any tariff issues with us. and the current administration is not putting their guns on them, right? So the key is Walmart has been very successful in doing that. Trina said Thursday 15th is a full moon. Bingo! There you go. Now you're talking. That's a major technical indicator. All right. So that's good. That's good, Trina. You know, I kind of looked at it over the weekend. You know, I have the moon calendar on my thing, which reminds me, I don't want to get into it because I'm a little bit of an astronomy buff. The Perseid shower, meteor shower, which has been going on from late July and August, it's going to peak sometime next week. So, you know, I might disappear for a day or two out there in some observatory, all right, up on a mountain. So it has to be seen. It's unbelievable.
Saturn and Jupiter are also visible.
There you go. Mike is
to the moon.
There you go. But this meteor shower, I'll tell you, it's unbelievable. You know, it's it's just mind-boggling, and it's spiritual. You name it, it's all good. So yes, and Thursday is the full moon. So yeah, so I think Walmart's doable. I think this is good. I'm not playing this on technical. I'm just playing it on a kiss of the 50-day moving average right here. And all the shifting production to other outsourced countries and stuff, I think the impact on their overall sales is going to be minimal cost of production. So we shall see. So Walmart's on Thursday. Finally comes around, this is before the open, by the way. And then after the close, we have NVIDIA. That's a total crapshoot. There is a stock, if it moves $15. And if it goes down. So this is NVIDIA's chart. And you know me, I'm an NVIDIA bull. And I think NVIDIA is going to manage their numbers quite well. Same story like most other stocks. This is shrinking. We have a higher low or a lesser drop on the MACD histograms. Okay. Overall, I think the stock, this should turn, but I have no idea. Okay. These are too difficult to game on the daily charts. And then we have the stochastics, which are pretty good. Forget the Mcclellan, because that's not what we're looking at right now. Let's take a look at the external picture. There's a lot of lines on this because we have traded NVIDIA extensively, as you know, and overall very successfully for many, many weeks. And time to time, I'll push NVIDIA out. So this is the way I look at it. If NVIDIA breaks, it's going to go to 140. Like, oh my God, everything's going to hell in a handbasket. We'll never make peace with China, so we can't sell to them. They can't buy from us, blah, blah, blah. Gaming industry is dead. Bitcoin's dead. I think no. I think the fact that Bitcoin's hitting new highs, not new highs, but it's above 11,000 or so from what I last saw, because I don't trade that anymore. Still have some money just left in there. Is helping NVIDIA, because NVIDIA makes those big, big fat chips which run the servers that create the Bitcoin. Remember, there was a huge Bitcoin play at one point, and Bitcoin went down like crashed and burned a couple of months ago. So did NVIDIA, even though it's not that big of their business. So I would look at it from a big standpoint. You got upper end of NVIDIA, which I thought we would get to, which was 194. It didn't. It did get to 180. So you got a trading range of 180. You got a lower range of 100 and whatever this is, 130. I don't think it goes 130. Worst case scenario, the stock plummets to 140. So if you have some calls, you'd be like, oh my God, I hate this. And if I have some calls, I'd be like, I hate this. Look at this, stock's down 14. You bum. But then I would fix my head and I would be a buyer at this level. However, I do believe that NVIDIA somehow, maybe, this is a serious company, given the fact that the gaming business and the Bitcoin server business, you know, all the chips that they use to mine Bitcoin, that's the word, mining Bitcoin, right? The stock has a good shot to go at least towards the 34-day moving average and the 2164. So that's about 10 points. I would take that bet. So NVIDIA is on Thursday after the close. Then we have another great American institution, which is a chip manufacturing company that most people don't talk about, but has been doing extremely well, is AMAT, Applied Material. Any questions on NVIDIA, guys?
No.
Okay, sounds good. AMAT. AMAT's chart is pretty significant. Okay, this was the reason these charts have so much structure on it is because we've traded them before. Not as much, but I normally trade in AMAT. AMAT was a huge money maker for me back on the Wall Street days. We had such huge positions on applied materials back in the 2000s. You wouldn't even want to know. And I wasn't even a trader then. But this is a great company. It's a great American institution. They know how to manage their business to a level that is just unbelievable. So there's your gap. There's a gap fill. So I'm going to bring out that gap fill here. And you can see it, right? So we are, right now, everything's pointing higher. This is good. We can all agree on that. Mcclellan Oscillator, not that important, but still good. Mcclellan Oscillators, remember, are very, like I said in my last webinar, are very critical indicators during extreme circumstances. We are not in an extreme circumstance right now. We're on a quick intermediate uptrend. This is still good, even the fact that it's still above zero, and we need this to shrink. So remember, this is obviously a semiconductor chip, not maker. They actually make the machines which make all their, all the fabs, they call it, fabrication equipment. So NVIDIA is in that AMAT is in that picture. So semiconductor sector has been under pressure. So we have to keep that in mind. I would say, the stock is not supposed to move like 10, 12 bucks. The implied volatility, i.e. the movement of the stock post earnings, is $2.52. I'll take that. So $2.52 means that if we get 252 from here, we would be up here somewhere. And I would say one can easily play this. The calls are cheap, maybe $1, $2. And this is a major player in the overall semiconductor business. So if AMAT does well, you will see other chip stocks like AMD, which by the way is soaring through the roof. We did very well on AMD just by, I just put it out there. This is a stock that has to be put on the radar. So a lot of other stocks like Micron and stuff within the SMH are going to go higher. So there you are. Then we finally have ZTO. That's another Chinese company, if you remember, ZTO, which was under a lot of pressure. I've never traded this stock, but it's coming out. And ZTO is the Chinese telecommunications company. And that is supposed to move about $1. So you might want to keep this on the radar. So that's it for earnings. There are no Fed meetings, no Fed speakers, lots of inflation numbers coming out this week. CPI, Empire State Manufacturing Survey, productivity and cost, blah, blah, blah. Housing starts, consumer sentiment, very important on Friday. Retail sales, no Fed meeting, nothing. That's the next one is in September. So that's the story for this week. I think we're pretty well prepared. Unlike Trina said, Thursday 15th is the full moon. There you go. Let's take a look at our lovely chart before we leave. Not bad. Doing exactly what we forecasted, what you guys agreed on, and what Trina actually had control of the mouse and showed. On that note, guys, all of us need to be very disciplined. This whole volatility crap that happens every single day is a complete pain in the butt. I know that, you know that, everyone knows that. But as active traders, if we can manage to really focus on these charts and not panic, and buy these levels and all the alerts and stuff coming through, you don't have to buy. Well, somebody said, I can't buy all your alerts. I said, who asked you to buy all the alerts? Just buy the SPYs, just buy the Qs, just play the straight market. We can't give ourselves excuses after excuses and excuses. It's not going to take us anywhere. My business is to cater to my customers, which are you guys, which means there are day traders, there are swing traders, combination of both, long-term traders, futures traders, and index traders. So we have a whole mix of people. That's the reason why I put out those alerts which show up on my screens, which I think are worth making money on. You don't have to buy every one of them. but some of them are going to go through the roof, like many of them do. So it's up to you. Otherwise, just play the straight market. SPYs, Qs, DIA, SMH. Individual stocks are the biggest movers. Remember that. That's where the big money's made. On that note, God bless you all. Let's have a great week. Thank you for attending.